Previously, we explored how ChatGPT analyzed a Renko chart and focused on covered calls. Today, we're going a step further. We'll look at what strategies GPT suggests beyond covered calls when I tell it my personal risk and reward preferences. Hi everyone, I'm Carl. Welcome back to the Renko Trading channel. Before we start, this content is for educational and experimental purposes only. It is not financial advice. Always do your own research before making any investment decisions. Today we're diving into how ChatGPT can build option strategies when we give it clear risk and reward preferences. Last time, GPT focused on covered calls. This time, I'm pushing it further, starting with a 75% safety, 25% reward setup on target, and then testing the same process on Tesla. I'll also switch to a 50-50th balance so you can see how the recommendations change, and I'll even challenge GPT on why it keeps leaning towards certain strategies. The goal is to show you not just the trades, but how to guide GPT so it matches your trading style. For this demo, I'm using Target, ticker symbol TGT. I've prepared a 3-year daily Renko chart with ATR, 14 brick size. And I'll also use Copilot to summarize the stock. Then I'll upload Fidelity's options chain screenshot so GPT has real data to work with. After I provided ChatGPT with the stock summary from Copilot, the 3-year daily ATR, 14, Renko chart, and the options chain screenshots from October through January 2026 taken from Fidelity, I gave it the following prompt. With everything prepared, here's the exact prompt I used for ChatGPT. Before GPT starts the analysis, it asks me a series of questions to understand my account type, risk tolerance, and trade preferences. Let's walk through them. About ownership and account setup. GPT asks, do you already own Target? If yes, how many shares and what's your cost basis? My answer, no, I don't own Target right now. Next, account type and permissions, is this cash or margin? IRA? Are naked puts allowed? My answer, margin account, not IRA. No naked calls. About position size and time frame. GPT asks, what's your preferred position size? Each cash-secured put ties up about $8,000 at the $80 strike. My answer, 5 contracts. Then, which expirations do you prefer, 40 days, 75 days, 100 days, or 130 days? And are you comfortable holding through earnings and dividends? My answer, GPT can choose. I'm okay holding through earnings and dividends. About risk, reward profile and trade management. GPT asks, what does 75% safety mean to you? Do you want at least a 75 to 85% probability of profit, which usually means a delta around 0.2 or lower? My answer, yes, exactly. Next, how do you want to manage trades? Take profits early, roll positions, or something else? My answer, take profits at about 50% and roll at 21 days to expiration. Lastly, about assignment preference. GPT asks, if a short put is assigned, are you comfortable owning TGT shares, and at what price? My answer, yes, I'd be fine owning it at the strike price I sold. So with that checklist complete, GPT has the context it needs. Now, let's see what strategies it recommends for TGT under my 75% safety, 25% reward preference. So here's what GPT came back with for target under my 75% safety, 25% reward model. It built a safety-first plan that mostly leans on deep out-of-the-money puts. The core idea: sell 5 puts for November, but split the risk. 4 of them are very safe, with about an 88% chance of expiring worthless. The 5th is a little spicier, closer to the money, to add a bit more return. Altogether, that's about $38,000 in collateral, generating around $600 in premium, which works out to roughly 8% annualized. If assigned, my average entry price would be almost 20% below where TGT trades today. For trade management, GPT suggested simple rules: take profits at 50%, roll around 21 days to expiration, and adjust if the delta climbs too high. And since I said I was okay with assignment, GPT added a wheel step, basically turning those puts into covered calls if I end up owning shares. Finally, it even threw in a defined risk alternative, a bull put spread version of the trade that ties up way less capital, but just collects premium instead of acquiring stock. Now, I don't just take GPT's word for it. I went over to OptionStrat and used their optimized tool to double-check. I set the direction to bullish, picked the same expiration GPT suggested, November 21st, and then slid the optimizer bar toward my 75 to 80% probability range. That lines up with my 75-25 model, since I want higher safety and a greater chance the option expires worthless while still collecting premium. And here's the interesting part: OptionStrat's top suggestion was also to sell the $75 cash-secured put. So GPT's recommendation lined up really well with what OptionStrat generated. That gives me extra confidence that the trade fits the model I'm going for. Next, let's try Tesla under the same setup. I'll feed GPT the Tesla Renko chart, 3-year daily ATR, 14, along with the options chain data. This gives us a chance to see how GPT handles a different stock's volatility. When I switched over to Tesla, GPT gave me a very similar playbook, again, cash-secured puts that line up with the 75% safety, 25% return model. The strikes were obviously different since it's Tesla, but the structure was the same: safe puts for high probability, with the option to take on a little more risk if I want extra premium. And just like with Target, GPT also suggested a bull put spread as an alternative. That's useful if I don't actually want to own Tesla shares, because it cuts the capital requirement by about 94%, while still keeping a defined risk position. Just like with Target, I also went over to OptionStrat to check Tesla. I set the expiration date to January 16, 2026, and then adjusted the risk slider. OptionStrat doesn't have a 75% setting, but it does let me pick between 70% and 80%. At 70%, it suggested selling the 240 put. At 80%, it suggested selling the 220 put. Now here's the interesting part: GPT's plan was to sell most of the puts at 260, plus one at 280. That's noticeably higher than OptionStrat's strikes, which means GPT was positioning a little closer to the current price to collect more premium, while OptionStrat leaned further out for more safety. So both tools give me valid choices, but with slightly different trade-offs. GPT tilts for more income, OptionStrat leans more toward safety. Now let's change gears. Instead of 75% safety, I'll ask GPT for a 50-50th balance between safety and maximum return. Notice how the suggested strikes and expirations shift. Instead of very conservative, lower delta puts, we're now getting closer to at the money or slightly out of the money trades, with higher return potential but more risk of assignment. One thing I noticed: GPT kept recommending secured puts. So I asked it directly, why only secured puts? What about other strategies, like defined risk spreads or different structures that fit my criteria? This is an important step because it shows that you can challenge GPT's reasoning. It won't always consider every alternative unless you prompt it to. After I asked that question, GPT didn't just stick with secured puts anymore. It came back with a broader set of strategies, including spreads and other defined risk structures. Even more useful, it explained when each approach makes sense, depending on how much capital I want to commit and how much risk I'm comfortable taking. So in this session, we saw how GPT adapts option strategies when I change my risk-reward preference from 75% safety to a 50-50th balance. We also saw how it handled two very different stocks, Target and Tesla, and how asking the right follow-up questions can open up the conversation to more than just secured puts. But remember, GPT isn't always spot on. It's important to verify its suggestions, double-check with tools like OptionStrat, and make sure the trade really fits your own strategy. If you found this breakdown helpful, check out the previous video on covered calls where we started this series. And don't forget, this is all for educational purposes only, not financial advice. That's a wrap on today's breakdown. Thanks so much for watching. If you found this helpful, give it a like and hit subscribe for more Renko trading insights. Don't forget the bell icon, and I'll see you in the next one.